Okay, let's get right into it. Yeah. So I think I messed up, right? I said my trading plan was initially going to be to trade SPY options, but I've been looking a lot into risk management and stuff like that, and I really think I'm going to just switch to Forex right off the bat. I know I said I was going to switch to futures, but the margin requirements for futures are still pretty large for things like Spider, the S&P, and for Forex pairs, in general, I don't want to trade futures anymore because I realize with Forex, the way you can manage risk is just so much more better in terms of long-term trading and like trying to get profitability than just being able to get more leverage. Like I'd rather have more risk management than more leverage. And so what was I trying to figure out? How can I trade lots on the S&P? And that's when I learned uh, that S&P does not have lots. Like you can't trade it like a forex pair. Like there's no SPY against the US dollar. And so I realized you can't buy lots. You can't buy spot forex. You have to buy either futures or CFDs, which contracts of differences, which basically are pretty much the exact same as spot forex, except you have to specify the size of your positions or something, and you also need you pay the difference. So contract difference, you pay the difference between if you had the underlying asset versus when you close the position. And so it's basically the same as a lot. It's just rebranded. But apparently you can't trade them in the US because of, I don't know, leverage restrictions and speculation restrictions, like you have to own the asset or something. And yeah, so that destroyed my plans of trading SPY in the future. And so today I think I've decided I'm gonna start looking into like genuine forex pairs like Euro USD, Australian dollar USD, Euro against the Australian dollar, I heard was a good pair. um, USD JPY, because you can trade lots, and with lots you can determine your lot size and change the risk your stop loss has, no matter how many pips it is. And that is just so advantageous for me to win in the long run, because if I have something like a 1 to 2 risk to reward, all I need is 33% wins. I need to win 4 out of 10 trades I take. And if I can't control how much I'll lose every trade, well then that 4 out of 10 requirement might be different, might be 5 out of 10 or 6 out of 10. And I just can't have stuff like that happening and messing up my flow. So from this point on, I got to start back testing all the pairs and, finding which one is mine. And I think I'm gonna make a video about that where I just go through and back test a shit ton of pairs and decide which one is my best option, right? But I'm gonna have to leave SPY behind in the dust for now, my precious SPY, until I get enough for those futures. And yeah, so right now it's the 21st. I'm making a video about the 20th recaps. Although I didn't take any trades because that was the FOMC meeting, I still marked out some spots that I could have possibly taken a trade if I wanted to, and if it matched my bias and all that kind of stuff. But I don't remember exactly what my bias was. I don't think I really cared. I don't know. But yeah, so I'm filming this on the night of the 21st, so probably won't be out until the 22nd. I'm gonna film the today's trading video right after this for what I did today. I also took no trades. I barely charted anything, so it's probably gonna be the shortest video on my channel. And then after that, maybe tomorrow I'll post a video about back testing, but I'm tired as hell right now. I didn't even have a long shift at work, but man, my legs are tired. I'm so tired. My sleep is just, I don't even know what to do, bro. I get 7 hours of sleep, like decent sleep, and I still feel like shit, like all the time. and I don't know. But let's talk about the 20th, okay? So, right, market opens. First 15 minutes, y'all know my rules, right? First 15 minutes, I'll let the price action play out. So if we're looking at this, first 15-minute candle, fat black, all of this, there's nothing. There's no liquidity sweeps. There's no nothing. I can't do anything. So I'm waiting. And then we hit this area here, where we hit this key level here, over here, all like from 2 weeks ago almost. We have these lows, which I assume the markets were chasing today, which it actually hit all of them. And if we go to the 1 minute, I was just setting up like what my trade might look like if it hit all my target or all my steps in my execution. But right, price came down, it's hitting this key level, went down to this brown key level, bam, 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 bam. We got the swing high from this black, green to black, this swing high on this bearish trend, this order block formed off these two black candles off the top of this one. See this blue line, or this light blue line? What the fuck am I touching, bro? Okay, that light blue line right here. Also this fair value gap and this equilibrium. So we broke structure here, bam, broke structure, went down, came up, broke structure to the downside, and if I place an order under this order block, not only would it have filled equilibrium, it would have filled the order block, would have filled the fair value gap, and if it went up, that would have been beautiful. But obviously I knew there was a shit ton of bearish momentum, and then I already knew once we broke through this fair value gap, it was gone. But that was one of my rules I want to start looking into. If we break structure up, form a new low on the uptrend, and then break through it before we hit our order block, I might just, I'd either cancel my order, or if my order gets filled, I'd immediately sell it, because it means we broke structure again to the downside, and we're probably going to see our fair value gap not get respected, order block not get respected, and just bam through, which is what happened. So I'm gonna have to take note of this. I don't know if I put that in my notes. Yeah, I did. So I'm gonna keep looking into that for during back testing. And then same thing happened a little later. I was looking for price to target these lows. Maybe, I mean, we didn't exactly tap him, but maybe we'd have a reversal here off this brown low here again. So it came down, up, down, order block off this black candle, swing high here, broke the swing high, and then this candle barely doesn't touch the order block. Trends up for like $0.50, which, I mean, I could have made some profits if I targeted these swing highs. Could have just scalped this if my order block got hit. Same with here, actually. I could have, or actually no, this nothing worked here, but this one worked for whatever reason, broke through. See, price almost touched the order block, but it didn't break structure down again. So that's where my bearish, that's where my my new confluence might come in, to prove that my execution strategy or my execution plan is where I shouldn't execute. So if this happens, see, this one didn't break a new low, like we didn't form a new uptrend low until here, from this black to green, which we broke immediately, like on the second candle after it. But if this was a black candle here, went up and then tried to hit the order block, I wouldn't have taken that trade. See, if this hit the order block, that might have been a better execution for me, which if a $0.50 I could have made some money on. But broke structure down, and I just hopped off after this got disrespected pretty much. I was just kind of annoyed with the price action today. I don't know if people were trying to sell off for the FOMC meeting, which happened at 12 p.m. But you can see right when it hit 12, like, price just, I mean, it consolidated, or not really consolidated, but it was choppy, but it finished this like 7 point move back up, and then it closed kind of near where it opened for the day. But Yeah, that's the 20th. And what did I write here? Bearish low time frame. So when the low time frame bias is bearish, it's probably a retracement for a higher time frame bias that's bullish. So if we have a bullish uptrend on the higher time frame and we go to lower time frame, we see some bearish, probably a retracement for that upper time frame, which I just wrote that down. So this could be that retracement. Maybe we'll see a bullish day here. Price kind of choppy here again. Today it was choppy. I wasn't really on. I was up till 2 a.m. So I got up at like 10 and I didn't really look at the charts till 11. I was just looking at previous price action from today and I was like, yeah, I don't know if it's too choppy to trade. Well, some people like it like that, but I mean, I like it too, but it's just I couldn't really find anything that was fitting through my execution plan. So yeah, that's it for today. I think we had news today. Let me check what kind of news we had today. I think it was PMI or something like that. I don't even know what that means, but I just know that it is not a high probability day to trade. We had, yeah, flash services PMI. So it levels the diffusion index based on surveying purchasing managers in the services industry, whatever that means. Survey of about 400 purchasing managers, which ask respondents to rate the relative level of business conditions, including employment, production, new orders. So basically just yeah, flash services. So just kind of like a services data day, like where I guess investors can see how general businesses are doing or something like that. I don't know, however important that is, but yeah, that's today.